And everyone, it's Tim Reazor with the Revere Asset Management, just after 3:15 here on a Wednesday night. So very quickly, stock nerds and market lovers. Before you and I begin, listen, a lot's happened today. Definitely a tone and tone of the market have changed. We're going to cover that, but I want to give you tonight 2 free tools. I'm going to talk about the ticks, and I'm going to talk about a certain cross. We'll just use an X for that. That I have used time immemorial to identify when to short, to identify when not to buy the dip, to identify, okay, this shorting period is probably over. And I want to show you something that happened on Monday that was really super duper interesting. I think that you will take with you and forever in your trade, be able to use. Listen, but before we start, I want to point out a couple things to you before we begin tonight's journey. So a couple weeks ago, end of the month, right? I talked about August, and this could be setting up, okay? And so are we going to crash like August in 2015? Just watch the beginning of this video. And so how you get there is revereasset.com. Go to the podcast tab. That's where I'm at right now. And it's what's Robinhood's long game. Get through the nonsense, right? I talk about donuts at the start and stuff, but just get through the nonsense and get to the part where you start seeing me show a chart of August 2015. I think that's important here because how that big market margin call Monday set up was kind of like what we did here on a Wednesday today. It's important that you know that. Okay, so let's take a look at that. And then this is really interesting here, this podcast. And you don't have to listen to the whole damn thing. Just listen to the beginning, okay? And what I mean by that is I talk about the Nasdaq going to underperform, but in all honesty, it hasn't underperformed the way I thought it would. But the result is still the same, and I want to explain that to you as this video goes on tonight. But listening to these 2 podcasts or watching them, you can get these on Apple, iTunes, Google Play, or you can just watch them here on the website. I think will be very enlightening if you haven't seen them already. Then listen, any questions, concerns, comments, take umbrage with anything that I'm saying here. All you have to do, of course, is reach out to me. Tim at revereasset.com, 855-722-5932. You can get a hold of me. Now listen. What sets us apart from every other shop in the free world in China is that we allow you to talk to everybody. Like we don't hide behind plausible deniability. Like if you want to talk to the guys that make all the buys, all the sells, they handle all the portfolios, you're going to get them right here. You got, well, Merle, she's just wonderful. She does not handle the portfolios, but like Hunter, Alex, Don, like if you want to talk to them about what they've been buying, what they've been selling, what's on their watch list, what triggers them in, what gets them out, they're available to you. That's what sets us apart from every other shop and every other strip mall advisor. We are available and accountable to you, and that's the best part. Well, it's one of the best parts about the shop. And of course, we want to talk to America's fiduciary right here, Danny Stewart, Dan at revereasset.com. We always pick up the phone. Listen, we don't have any salespeople. You notice that Meryl, she does a hell of a lot more than run the office. I'll tell you that much. We don't hide behind salespeople or plausible deniability, and that's what you're going to see a lot of this week and probably the next couple of weeks from a lot of those strip mall advisor types. And so, if you want to experience, if you're not a client, you want to experience what we're talking about, just call. And I'd be more than happy to talk to you about strategy and everything else. So, and then listen, a ton of people like to get a hold of me on Twitter. I like that. It's brevity, a little trading group on there. And by trading group, it's just exchanging of ideas, what you're seeing and stuff. So at TJ Reazor, so you get a hold of me. It's like we're texting buddies, and we can just have a good old time. I call them the IPO Club affectionately, Captain Dan, Mark from Buffalo, a couple other folks. Listen, exchanging messages throughout the day, and I make myself available to stock nerds and market lovers. And so absolutely here in that regard for you. So it's at TJ Reazor. And then listen. Stock nerds, market lovers. These videos are all the things that we're about to talk about. They are for your edification purposes only. They're never ever to be misconstrued as advice. When anybody sees anybody seek advice, I swear to you, all you have to do is in fact give us a call. So here's how we're going to attack this. We're going to talk indices first. Then we're going to talk this indicator called the tick. And I'll show you how to use that and how you can keep yourself out of trouble with it. as markets continue to press lower here after the close. It's only 320. And so let's look here at S&Ps. Where are they at right now? Yeah, they're pressing lower here. And so this sell-off you could kind of see coming, right? And so we're going to work our way backwards, big time frame to little time frame. So let's start with the daily chart here. So that's 195. Let's get to a daily chart and let's set it up on an average true range. So so what I'm showing you is a probabilistic mindset. It's not a after actions mindset. It's, you know, a hindsight mindset. It's a probabilistic mindset. And so let's say you only trade the indices, right? But what I'm about to show you goes for any stock or any ETF or any commodity. Look, on the indices especially, when you get to +2 ATR, and when is the last time you got beyond +2 ATR? It was the spring. So if you're long the indices at +2 ATR, you need to be thinking, okay, do I want to be super aggressive this particular indice? I know it says S&Ps are those S&P futures, but you can see recently we got that +2 ATR, and what do? Yeah, we corrected back. That's kind of what we've been doing since April, right? +2 ATR, pull back, +2 ATR, pull back, +2 ATR, pull back. Why would you think something would be different? And so, well, you can say, well, Tim, do I just sell stock and barrel? No, that's not what I'm saying. What I'm saying is, if let's say you do nothing but trade the indices, and you've got your full position on, well, maybe you start paring back that full position to 50% position, you know, at the top of the 2 ATR, and then okay, it pulls back to that -1 ATR. You know what? Let me recapture all the gains and let's see if we reset back to the mean. Like, that's a way you can handle it. You can trail stop, 3-bar trailing stop. I've talked about that a lot. If you don't understand the 3-bar trailing stop concept, more than happy to show you. Might be my pleasure. But you got to understand that these moving averages, excuse me, these average true range lines represent something, represent the mean in everything. Jay Powell can't stop it, right? Jay Powell, he can't stop the reversion to the mean. Even though there's all that Fed support, I get it. I'm not talking about doom and gloom. I'm not talking about anything extracurricular to the markets. The market just ebbs and flows, and so you want to be prepared for that. And so if you don't understand the mean here and the average true range, so on the S&Ps here, the S&P futures, on a typical day, they traverse about 38 points, okay, throughout the day. And you can see clearly that's why it gets your attention, because it's above 1% for the day, and it's above the average true range. So this right here represents one of those periods. This is 2 of those periods. This is 3 of those periods. And what that represents, same thing to the downside, by the way, is you can see a visualization of what stretched is, what overbought is, instead of relying on conjecture and what somebody might be saying on the television, on the Twitter, on the newsletter that you get, whatever. You can actually see it factually. There's a reason why you don't see our faces during the 5 nights of videos we give you every week, every week, because this charts are the facts. The facts don't lie, right? I don't need to sell you on anything. I'm showing you a picture of what's really happening. In a world where price is truth, this I cannot make up. And so you can see time memorial, everything pulls back to eventually the 21. Now we're below the 21, okay? And so it gets really interesting here, and we're going to look at a different time frame to see where this could possibly be pulling back. And the SPX hasn't come back to the weekly in a long time. As a matter of fact, it's been since March. To say it's due, understatement, but just because something is due doesn't mean another thing has to happen, right? The market can remain irrational longer than we can remain solvent. And so are there other things brewing underneath the surface? Well, today the S&Ps closed below the 21. That's the first step, right? But how about the big thing that was kind of holding up the market there for a while, like July in the beginning, before the jobs report in August, the Nasdaq. So let's take a look at the Nasdaq here real quick, okay? So the Nasdaq, it's no different, by the way. Nasdaq at 3rd ATR pulls back, 2 ATR pulls back. And here it can't even get above that, but we're going to talk about that, right? The Nasdaq has been flashing clues that it is the weak index. It is the one that you don't want to be super aggressive with, that it's going to underperform. And you can see it a mile away, and I'm going to show you how you could do this. And so, well, Tim, what do you mean by that? What were you seeing? Well, okay, so going back to what I got right and how I got it right, but I was wrong. So if you go back to this podcast, right, I talk about, excuse me, the August 6th there. I talk about, will tech stocks flop like LeBron? And so they did initially, but then I talked about how it would happen with rising yields, and it's not happening with rising yields. So on Monday, sent a note to the guys on the morning call that we have as a shop. I said, if the market falls, it's going to be because over the weekend they started talking. They sent a Fed guy out there, started talking taper amongst a bunch of other news, right? And so they started talking taper. And so, and when you start talking taper like that, right, you get these rising yields, and maybe tech stocks are going to underperform. But there's another scenario. So in 2012, 2013, I believe it was, the last time they talked taper, the market actually pulled back about 10% and yields went lower. And on Monday, yields went lower and the market was pulling back. And that, my friends, is very interesting. And so you could see this though. So let me show you what I was looking at back when I made that identification and what I drew on my charts. Okay, so it's a trend line. So this is Thursday before the Friday jobs report, before it was a great jobs report, and interest rates, yields kind of spiked, right? And you could see the Nasdaq, okay, it can't get above the Thursday highs. As a matter of fact, it pulls back. And again, we're on an hourly chart. It challenges that trend line. We're on an hourly chart. It challenges that trend line. We're on an hourly chart. It challenges that trend line. We're on an hourly chart. And now we just kind of fell apart. You could see this. And so this is where you'll hear folks talk about the patience game of the market. Like everything's so instant these days. The internet's, everything happens so quick. You get hourly delivery from Amazon. Give me a break. And so like this is 3 weeks worth of time. Well, this Friday it'll be 3 weeks. 3 weeks worth. It's 3 weeks worth of time for this to develop. And so unless you have a system, unless you've identified something that works for you personally, a system of how to harvest profits, you need to be on your toes. And so what do I mean by that? Let's look at, I wish I would have written down some examples, but I'm gonna, I'll spin the wheel here and I'll take a chance. I'm doing this from memory. So let's look at Docu. So what is Docu? Oh, perfect. Okay, so Docu just recently. Docu hits the third ATR. What do you think is going to happen? Yeah, it pulls back, gets the second ATR. Well, it rallied back to the second ATR. Yeah, it pulled back. Third ATR pulled back. Third ATR, a little pullback. It rode the rails. It rode the rails, rode the rails, rode the rails, rode the rails. So what do? Just trail up your stop. It's a great move in Docu, right? But now it looks like it's doing about a half back retrace, excuse me. Let's see here. Let's look at something. Just off the top of my head. So what do I mean by, what was I getting to? You need a system to harvest these profits that you may have, PANW, instead of giving them back. PANW, look at this, can't get really to beyond the second ATR. So you can look left to be right. I know that's a little stupid saying that people do. You know, look left to be right. Like, but look, it kind of makes sense here. You can't get past the 2 ATR. I mean, I guess that's close enough for everyone to the third ATR, and now you're just giving it back. Let's see here. How about GS? What's GS doing? Oh yeah, old GS, third ATR. And so what happens is when these stocks hit their third ATR, or they get, their second beyond the third ATR, most people don't have a mechanism to turn off the greed lever. And this is something I painfully, nobody, by the way, there's nobody who's ever traded stocks or acted in markets who hasn't gone through these things. If they tell you they haven't, they're full of it. Okay, so let's just all look in the mirror and know that we've all have made mistakes. And what I try to do is just share the ones that have really hurt me in the past. This, what I keep harping on with you, is absolutely one of them. It's a greed lever. Yeah. Well, I've got a great trade going on and I don't want to take profits. Well, you have a great trade going on, but you're going to you're about to do a half back retrace at the very least, or give up all the gains. And that sucks. It just sucks. You need a mechanism that allows you to harvest gains. And maybe you take half and let the other half ride. And then when it's not working out, you just pull it off the table. Or maybe it does work out and you're like, well, at least you're participating. But a proactive methodology of harvesting profits is absolutely what will keep you in the game long term. And look, I get it. Some of the people that watch these videos, God bless, have been investing longer than I've been alive. And for that, I think it's awesome, right? And so I can only share the mistakes I've made. So hopefully you can go out and make your own. And so I just try to help in that regard. Like let's maybe an STLD or an X. Yeah, like they've all just did it. Like great move, third HRM. You have to have some kind of mechanism that allows you to harvest profits. And so going back to that Nasdaq chart, NQ. And so we'll get back to the hourly. You could see this underperforming, right? I mean, look at that. You could see it. It's just underperforming. Doesn't get to a new high. S&P's made a new high, but you can't get the Nasdaq to. And so it tells you, do you want to be really long, really heavy this particular index when it's underperforming? And look, the difference. Nasdaq, S&P's make a new high, right? So look, what it appears to be hindsight is actually the whole thought process. And what I share with stock nerds and market lovers, whether you're a little trading group on Twitter or whether you're the fellows in the shop or what I share with you here in these videos, all the same information. You know, of course, the shop just gets it when it's happening in real time. So let's talk about today and let's talk about Monday and let's talk about the ticks. And so here are the ticks. Okay, these are the on TradeStation. What they're measuring is the buying or selling off the New York Stock Exchange. Now, in reality, on Thinkorswim is about 3 different exchanges that make up the tick. On TradeStation, it's really the pure tick, the real buying and the real selling on off the New York Stock Exchange. So the values are a little bit different, but the whole sentiment is the same. And so here is Monday. And so let me show you Monday on the S&Ps. Okay, so let me change the chart and I'm going to show you Monday. Here's Monday, right? So Monday, you have this move, like it starts out lower. The day starts, so here's Sunday night, the futures start out lower, and then Monday it recovers. But there was a clue on Monday that said you probably didn't want to buy that. You don't want to be aggressive. I do want to keep that, just pause right there, keep that in the back of your mind. What stops you from getting aggressively long on a Monday, okay? And I'm telling you, it's going to be the ticks. Well, why? Keep that question in the back of your mind as I explain how to use this. Real buying, buying that changes trends in market, intraday trends, and it helps establish trends in markets, will take place when you see plus, excuse me, yeah, we'll say plus 800 to plus 1,000 on the ticks. And then real selling is minus 800 to minus 1,000, okay? And so when you start getting probing these ranges, everything like 600 to 600 and like right here to right here, it's just noise. Like it's just the noise range, noise. What I'm really concerned with is 800 to 1,000 on the upside and the downside, because that represents real buying or selling. And I'm going to tell you that there was not one plus 800 tick on Monday. The highest tick value you got on Monday is this right here. And that is about plus 600, plus 700. Nothing, nothing to stop the downward momentum. And so you can see what happens Tuesday. You open up with this very low tick. And so oft 10 times when you open up with this very low tick, you've kind of shot your bullets. And markets will start to ebb higher a little bit. But notice you don't get a plus 800, you barely get it. It's like 842, it's like plus 842 right at the end of the day when the ramp comes. And the ramp is passive money, think Vanguard money coming in. It happens between 2:45 typically and 3. And so central time. So look, this is weak. There hasn't been all week a plus 1,000 tick, real buying in the market. And now today, here's Wednesday, okay? So we get some minus 1,000 ticks. But you're like, Tim, here it actually says plus 882. So why did the market sell off? That comes on the false move of, so here's 1300 time frame. You get selling, and then it's that first, this is a minute chart, by the way. So maybe there's about 15 bars in there, 12 to 15 bars in there. You work your way up back plus to 882, and then you can't hold it. You get another 1,000 tick, cancels this out, and now you're just waiting for the rollover, right? You're waiting for the rollover. But there's something even more here. So if we look, what happened the other day? Oh, one of the biggest clues of them all. Let's put the Nasdaq back on the chart, and let's look here at the daily. Let's take it to a chart that we're used to seeing with moving averages, not the average true range chart that I've been showing you. And look at what happened. It's magical when you see it. On a daily chart, the 5 came through the 8 yesterday. And it happened earlier. Excuse me. So here is 8/16. Today is the 18th, right? So the 5, I believe it was yesterday, comes through the, yeah, it was yesterday. The 5 comes through the 8. The 5 is the per 5 exponential moving average. The green dotted line is the 8. Do you know the last time that happened? Well, it happened here at 7:19. You can see kind of a swift move, but there's a difference. The swift move stopped at the 21, did not go below the 34. Watch what I do here. The last time that this happened like this was when? May, where you had the 5 through the 8, excuse me, the 5 through the 8 on a daily chart, and you had this really big move. And so you can avoid this. Like, you don't have to sit through this pain. So there's been a bunch of clues here, right? Like, you've had the underperformance on an hourly chart of the Nasdaq. So that leads you to just be patient, sit on some cash, sit on your hands. Maybe you're like, I'm more long the S&P. You're like, Tim, why aren't you talking about the Dow or the Russell? They're even worse. So now you've got the index with the stocks that matter, right? The Googles, the Apples, the Amazons, the Teslas, right? They give up the ghost here. What do you think is going to happen to the markets? And so I'm thinking what you're about to see is a move to the mean on a weekly chart. And you got to get through about 14,850. Oh, you're through there. Okay, so yeah, I think the March, and it's not going to happen tomorrow. What you know, it's options expiration week, right? So it wouldn't surprise me one bit. Would not surprise me one bit. Wouldn't surprise me one bit if you come up and kiss this 21, and then it just rolls right back over. So look to see if that happens tomorrow. And if that happens, it's probably, again, these videos are for edification, but if you wanted to paper trade it, see what happens if it comes back to kiss the underside of the 21, or if the 5 comes through the 21. Now listen, I have taught classes on this. So I've done videos on this. If you want the 5/8 cross video, I've got it for you. You want the average true range video, I've got that for you. I've been sending those to people all summer. And so you're more than welcome to them. Everything is free. And so, but I think they can really help you and make a material difference positively in your trading. And so by that, I mean, hopefully help reinforce some good rules or help you establish some good rules. And if you're new to my work, well, then it just exposes you a little bit more. But look, we'll never spam you. So if you want them, all you do is tim@revereasset.com. Hit me up on Twitter @TJReazor. My DMs are open. You're more than welcome to reach out to me there. But I've got a few other things here I wanted to show you. Oh, we talked about retail sales and sentiment. So look, the other stuff that might be coming into play here. Oh, I wanted to show you the weekly chart. Let's get the weekly chart up here. Weekly. So the pink line is the mean on my charts. So a move down to 14.2, I don't think is out of the question here. So this is a weekly chart. You're at the weekly 8. Right down here is where I think your target is. And the last time you did that, again, is May. And so there's a bunch of signs here. Doesn't mean it's going to sell off. It doesn't mean it has to do anything. It's a market, of course. Anything can happen. I reserve the right to be wrong, but I'm fairly decent at reading the tea leaves. And yeah, but what happens to most people, and look, it happens to everybody. You either learn from it or you don't. What most people do is, like, we'll just leave it on the NQs, this daily chart, right? What happens to most people is you trade this, right? Like, oh, I bought it here, and you have no mechanism for harvesting profits. You have no mechanism for understanding when to be aggressive, when not to be aggressive, and you just give it all back. And you just churn like the birds, right? Is it the birds that's saying to every season turn? Yeah, well, instead of that, you're just to every market, you just churn. And so you don't want to be a churner. And the only way to stop that, the only way I was able to stop it for myself, is to use a combination of the average true range charts to give me a visual, right? A visual representation of what may be a good time to harvest profits, and then understanding market movements intraday, right? And like these ticks here, when I saw these 1,000 ticks, fellas, hey, minus 1,000 ticks, give them a heads up. Like, most rallies don't start on minus 1,000 ticks. Then you get this rebound, right? But you never got to plus 1,000, get to plus 882. And then once you hit 1,000 again, it's like, oh, Katie bar the door, this thing's over. And then it didn't get to 800. See, 800's magic. 800 stops down moves momentarily in their tracks. It couldn't even get back to 600, let alone 800. And then you saw, coincidentally, if you just take this, right, we take this chart on a minute time frame, look at what happens at 14.15, right? So let's do that. So markets hit minus 1,000 ticks again. So do you want to buy that dip? Is that when you want to be aggressive? Or is it something that you're like, you know what, I'll just stand pat? So here's 1330, right? And markets are in that 882. And then 14.15, right in here, the markets have that minus 1,000 tick again. And then, and they can't get out of their own way. Same thing on the S&Ps. And so maybe you don't want to short, right? Because look, shorting's been really tough in 2021. But maybe you don't really necessarily need to buy the dip or be aggressive, right? Or lock in some gains or do something that protects what you got. But a lot of people believe we're going to get caught. By the way, let's look real quick. Robinhood reported tonight, and so did NVIDIA. Let's take a look real quick. I'm curious. Hood had almost 200% implied volatility. Yeah, like, look, the move was $6. So I have that up here. I have NVIDIA up here. Let's look at Hood. HOD. So market makers are going to win the day here. Almost 200% implied volatility, right? That's the equivalent of you're desperate for a car. The dealer has a car, and you know, you're paying $50,000 for a Ford Festiva when it's $20,000 car. And so yeah, you don't want to buy calls here or puts. The market makers typically have it priced in, so about a 70% chance that it stays within that $6.70 move throughout the rest of the week. We'll see. We'll see if that happens. But right now, after markets close, this is a big, what they would refer to as a nothing burger, NVDA. Same thing, I believe. NVIDIA, $10 plus or minus through the end of the week, and you're $2 higher. No, nothing big there. So look, we covered a lot. We covered the ticks. We covered the lagging, the underperformance of the Nasdaq, and how you could spot those signals. If you want the classes I taught in the 5-8 cross and the average true range, it would be my pleasure to send those to you. Tim at revereasset.com, at TJ Reazor on Twitter. Have any questions? At TJ Reazor is a great way to get a hold of me. Call 855-732-5932. There's like a 99% chance you're going to get Danny on the phone. Danny is a great interpreter. He's able to explain everything I'm talking about. And you can get a hold of me too if you want. I'm looking at my notes here to make sure. I'll save it for the podcast talking about the retail sales, but you're going to pick up on it. If you listen to last week's podcast and the importance I explained of consumer confidence being a leading indicator you'll know exactly what's taking place this week. So with that, my fellow stock and market lovers, you know I love you. We exist for you. So please, 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 please don't ever sit there and stew on a question. Just whether you like us, you're upset, it doesn't, whatever you're feeling, reach out to us, please, because we're here to do our best to help you. So with that, I hope you have a great night, and I will see you at the next update.